All right, welcome back to another episode. And this episode, it's something I've been wanting to record for quite some time. And I'm going to call this episode "The Death of the S&P 500 as a Benchmark." And I'm going to go through why I feel like that way. So before I continue, one thing I want to do and acknowledge is that this is not investment advice. This is just for informational purposes only. We are not giving you advice and suggestions on how to invest your portfolio. This is just education and information. If you're interested in understanding more, then clearly you're welcome to reach out to our firm, have an engaged conversation about this specifically. But again, this here is not investment advice. We are not suggesting that you should take and do any action other than me sharing my own opinion based on the information from an article on Yahoo Finance. All right, so let me go ahead and share my screen and let's take a look at what that article is. So this is November 15th, 2023. And now you can go back and let's Google right here, S&P 500 7 stocks. And these 7 stocks are what they're considering, what's considered the Magnificent Seven. Who make up the Magnificent Seven? Alphabet, Google, Amazon, Apple, Meta, Facebook, Microsoft, Nvidia, and Tesla. Okay, there's your 7 companies in the S&P 500 that collectively have risen 117%, outpacing the rest of the 493 companies in the S&P 500. Okay, that is the New York Times right there. We can go to the New York Times, we can go to Investor Place, we can go to the Visual Capitalist, we can go to Wall Street Journal, we can go to NPR, we can go to Investors Business Daily, we can go to S&P Global, we go wherever we want. At the end of the day, the S&P 500, the point and the goal of the S&P 500 as a benchmark was to acknowledge the 500 largest companies in the United States stock market as a benchmark to be able to track how a performance of a particular fund or an investment should be doing or could be doing. Okay, this affects a lot. This affects life insurance, index life insurance. This affects index annuities. This affects any type of investment strategies, indexing strategies with Vanguard if you're just in the S&P 500. Now, the average person or the professionals or whoever we want to say can easily combat and said, well, these 7 companies are part of the S&P 500. They're part of the 500 largest. Absolutely not talking about that at all. I'm talking about the S&P 500 as a actual investment benchmark, indicating that 500 companies in the United States are representative here. No, 7 are. And I'm going to show you charts based on this article from November 15th, 2023 by Josh Schaefer. Again, we can go through many other articles talking about the same thing. The S&P 500 has never been this top heavy. That's why this is no longer a benchmark. It's not supposed to be top heavy. The Magnificent Seven tech stocks, Apple, Alphabet, Google, Microsoft, Amazon, Meta, Facebook, Tesla, and Nvidia make up 29% of the S&P 500's market cap. Wow. Make up 30% of the market cap. And a chart in Goldman Sachs 2024 equity, U.S. equity outlook shows that the greatest portion of S&P 500 market cap ever dominated by just 7 stocks. Let's click on this link and let's see what this looks like. Okay, it's efforting. There you go. Okay. Boom. Look at that. So let's go back and let's stick with the article, and you can have access to this article. That perspective helps explain a second chart for Goldman Sachs that shows the Magnificent have gained 71%, while the other 493 stocks have gained just 6%. Okie dokie. Well, the S&P 500 has added about 19% this year. So let's look at these two charts. Let me scroll up. All right, hopefully you can see this okay. Share of the largest 7 companies market cap S&P 500 is at an all-time high. Again, 29% of just those 7 companies. Okay. Now, when we look at the right-hand side, the Magnificent Seven represented here 71% of the return. The S&P 500 did 19%. Okay, in 2023. All right, 19%. 71% was a Magnificent Seven. The rest of the 493 did 6%. What kind of benchmark is this? What kind of benchmark is this? I disagree that the S&P 500 is now a benchmark, or continues to be a benchmark until this gets resolved and situated. Okay. Goldman Sachs equity research team, led by chief U.S. equity strategist David Kostin, describes the Magnificent Seven's outperformance as a defining feature of the equity market in 23, and perhaps rightfully so. 2 other charts included in Goldman's outlook show how the Magnificent Seven have outperformed the other 493 stocks in key metrics that typically drive stock performance. From 2013 to 2019, the Magnificent Seven stocks grew at a compounded annual rate of 15% compared to 2% growth rate from the rest of the pack. That margin narrowed in the past 2 years to 18% and 15% respectively. But Goldman Sachs sees it widening again in coming years. From 2023 to 2025, Goldman sees the Magnificent Seven growing at a compound annual growth rate of 11% compared to the 3% for the rest of the S&P 500. The Magnificent Seven's net profit margin also outperforms, where 19% margins are above the 9.8% for the rest of the companies. Not to mention the long-term earnings per growth share expectations are 17% for the 7, while the number sits at 9% for the other companies in the index. From a fundamental perspective, in recent years, the trajectory of earnings has explained the performance of the Magnificent Seven relative to the rest of the market, Kostin writes. The outperformance of the Magnificent Seven this year has coincided with the rebound in margins and earnings that has outpaced the weakness across the rest of the market. He added, consensus expects the Magnificent Seven will continue to deliver faster growth than the rest of the index. So here's what they project. Again, this was written just right above. 11% versus 3% of the remaining 493. And then up here, we have the net margins at 19%, projecting to go up to 21% in 2025, versus the rest of the S&P 500 at 10% net margins, which still actually isn't too bad at 10%. But that's more conducive to a benchmark index than these 7 companies that are driving up the S&P 500. Now, again, you can make the argument that because they are the 7 part of the largest 500 companies in the index, then they have the right to be in there. I'm not saying they're not. All I'm saying is that utilizing the S&P 500 as a benchmark as how investments should satisfy, when 30%, 29% of the value cap is these 7 companies, and the return from 19% versus, what was it, 19% versus 6% without them, with 19%, that's a 13% swing. Okay. I don't know. Again, I'm not saying the S&P 500 is a bad investment strategy. I'm not saying that at all. I'm saying as a benchmark to compare is not necessarily an accurate thing to do any longer. Now, the Dow 30, we know, are made up 30 component companies that the company Dow chooses these 30. So they've changed throughout the years. Okay. Some of the companies that were on the original 30 don't even exist in business anymore. It's supposed to represent the Dow 30, represent the marketplace as a whole, as a component. NASDAQ is much different. Okay. So these are the three indexes that we look at. But I don't believe, again, putting a pin in this, I don't believe the S&P 500 should be an investment benchmark going forward. What can be something else, that maybe the Russell 100, maybe the Russell 1000, something other than the S&P 500, because you cannot have 7 companies outperforming 493 and representing the entire 500. Just my opinion. I think it's false advertising as investment advisors. I think it's false manipulation and market manipulation by the investment industry, if they continue to focus on the S&P 500 as a benchmark, and I'm including insurance companies using that as a benchmark as well. Now, as an investment strategy, Vanguard S&P 500 investment, have at it. Have at it. All I'm indicating is as a benchmark, it should no longer be used. So, anyways, agree with me, disagree with me. I don't know. Put your comments in there. Give me a thumbs up. Let's go ahead and subscribe. Again, just food for thought. I'm interested. I'm curious. What are your thoughts? What do you think? What's your opinion? I shared my opinion. What's yours?